Today's financial markets delivered another major day of headlines, as investors across Wall Street closely monitored technology stocks, inflation data, cryptocurrency movements, and growing expectations surrounding Federal Reserve policy decisions. Financial markets remained highly active throughout the trading session, as traders reacted to new economic reports, rising treasury yields, and continued momentum in artificial intelligence investments. Bitcoin moved higher during today's session as institutional investors continued increasing exposure to cryptocurrencies amid growing demand for spot Bitcoin exchange-traded funds. Analysts say major financial institutions are becoming more comfortable with digital assets as crypto adoption expands globally. Several investment firms reported increased inflows into Bitcoin-related products, showing that institutional confidence in the cryptocurrency market remains strong despite recent volatility. Market experts believe Bitcoin's long-term outlook continues improving as more banks, hedge funds, and asset management firms integrate digital assets into their investment strategies. Many investors now view Bitcoin as both a growth asset and a hedge against long-term currency uncertainty. The cryptocurrency market also benefited from renewed optimism surrounding blockchain technology and decentralized finance development. Gold prices also moved higher as investors looked for safe haven assets amid inflation, uncertainty, and concerns surrounding future interest rate policy. Rising inflation pressures and geopolitical risks continued supporting demand for precious metals during today's trading session. Analysts say gold remains attractive during periods of economic uncertainty because investors often move capital into defensive assets when market volatility increases. Meanwhile, Tesla shares remained highly volatile as investors reacted to ongoing concerns surrounding electric vehicle demand, global competition, and pricing pressure across the EV industry. While Tesla continues leading the electric vehicle market globally, analysts remain divided on the company's near-term growth outlook, as traditional automakers and Chinese EV companies rapidly expand production capacity. Some investors remain optimistic about Tesla's long-term opportunities in artificial intelligence, robotics, autonomous driving technology, and energy storage solutions. Others worry that slowing consumer demand and increasing competition could pressure profit margins in the coming quarters. Tesla remains one of the most closely watched stocks on Wall Street due to its massive influence on both the technology and automotive sectors. Apple and Microsoft continued gaining during today's session, as investor confidence in big technology companies remained extremely strong. Both companies have continued expanding artificial intelligence integration across their products and services, helping maintain strong momentum in their stock prices. Analysts believe the AI revolution could create enormous long-term revenue opportunities for large technology firms with strong cloud computing infrastructure and global customer bases. Microsoft remains one of the biggest beneficiaries of the artificial intelligence boom due to its investments in cloud computing and AI partnerships. Meanwhile, Apple continues focusing heavily on AI-powered consumer technology, software integration, and next-generation device development. Investors believe these companies remain well-positioned to dominate the future of artificial intelligence and digital services. At the same time, new economic data showed signs that U.S. consumer spending may be starting to slow despite continued strength in financial markets. Higher interest rates, inflation pressures, and rising living costs continue impacting consumer behavior across several sectors of the economy. Analysts say consumer spending trends remain one of the most important indicators for the overall health of the U.S. economy, because consumer activity represents a major portion of economic growth. Mortgage rates also remained elevated, continuing to place pressure on the U.S. housing market. Higher borrowing costs have reduced affordability for many homebuyers, leading to slower housing activity across several regions. Real estate analysts say elevated mortgage rates continue affecting home sales, refinancing activity, and construction demand throughout the market. Bank stocks traded mixed during today's session as investors monitored risks related to economic slowdown concerns, loan demand, and future Federal Reserve policy decisions. Financial institutions continue facing pressure from higher interest rates and changing economic conditions. although some banks have benefited from stronger interest income generated by elevated borrowing costs. Meanwhile, Amazon expanded its artificial intelligence investments as the company continued strengthening cloud computing infrastructure and enterprise services. Analysts say Amazon remains aggressively focused on AI development in order to compete more effectively with Microsoft and Google in the rapidly growing cloud technology market. Artificial intelligence has become one of the most competitive areas across the technology sector as companies race to dominate future digital infrastructure. Meta platforms also continued rallying after strong advertising revenue and growing optimism surrounding artificial intelligence integration across social media platforms. Investors remain encouraged by Meta's ability to improve profitability while continuing to invest heavily in AI systems, digital advertising technology, and future virtual reality development. Retail investors increased trading activity throughout the day as meme stocks once again gained attention across online investing communities. Market analysts noted increased volatility in several highly speculative stocks as social media-driven trading activity returned to focus among retail traders. The US dollar strengthened against major global currencies following stronger than expected inflation data and rising treasury yields. Currency markets reacted quickly as investors adjusted expectations surrounding future Federal Reserve interest rate decisions. A stronger US dollar can impact international trade, commodity prices, and multinational corporate earnings across global markets. Analysts now expect upcoming Federal Reserve speeches and economic reports to play a major role in determining short-term market direction. Investors are closely watching for any signals regarding inflation control, future interest rate cuts, labor market conditions, and broader economic growth expectations. Electric vehicle and clean energy stocks traded mixed during today's session as investors reacted to policy uncertainty, changing demand forecasts, and increasing global competition. While long-term growth expectations for clean energy remain strong, many companies continue facing short-term profitability challenges due to rising production costs and shifting economic conditions. Hedge funds continued increasing exposure to semiconductor companies as artificial intelligence demand accelerated globally. Chip makers remain central to the AI revolution because advanced processors are required to power machine learning systems, cloud computing infrastructure, and next-generation artificial intelligence applications. U.S. job market data remained relatively stable, helping ease some recession concerns among investors. While hiring growth has slowed compared to previous years, the labor market continues showing resilience despite high interest rates and economic uncertainty. Economists say employment trends remain critical for determining whether the U.S. economy can avoid a major slowdown. Corporate earnings guidance also remained positive across several major technology companies. Strong profit expectations and continued AI-related investment helped support market confidence during today's session. Many investors believe technology companies could continue outperforming other sectors if artificial intelligence spending remains strong throughout the year. Global financial markets reacted cautiously to rising geopolitical tensions and ongoing energy price volatility. Oil markets remained highly sensitive to developments in the Middle East and broader concerns surrounding global supply disruptions. Rising energy prices continue creating additional inflation risks for economies around the world. Financial experts warned that persistent inflation could delay future economic recovery and force central banks to maintain tighter monetary policy for longer periods. Investors remain concerned that higher borrowing costs could eventually slow corporate growth, consumer spending, and overall economic activity if inflation pressures do not ease. At the same time, artificial intelligence startups continued attracting billions of dollars in funding from venture capital firms and institutional investors worldwide. AI remains one of the hottest investment sectors globally as businesses race to develop advanced automation tools, machine learning systems, and next-generation software technologies. Wall Street traders now expect higher market volatility heading into next week's economic reports and Federal Reserve commentary. Inflation data, employment numbers, and central bank guidance could all significantly impact stocks, bonds, cryptocurrencies, and global financial markets in the days ahead. For now, investors remain focused on artificial intelligence growth, inflation trends, corporate earnings, and Federal Reserve policy as the primary forces driving today's financial markets. The combination of rapid technological innovation, economic uncertainty, and global monetary policy continues creating both major opportunities and significant risks across Wall Street and the broader global economy. That's all for today's financial update. Stay tuned for more breaking news covering Wall Street, the U.S. economy, cryptocurrencies, artificial intelligence, technology stocks, and global financial markets.